You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo, coming at you live here Friday, 1 p.m. Central, 2 p.m. Eastern, to wrap up the week that was and indeed still is from a volatility trading and trending and analysis and unusual activity perspective. We'll hit it all. Should be a fun time. If you like what you hear, we've seen a lot of new people flocking into the show these days. If you want to keep that flow continuing, of course, if you like what you hear, then leave a review on your platform of choice. We don't judge. Could be Apple, could be Google, could be wherever our app is, could be wherever you like to listen to the show, YouTube. Keep those reviews, keep those comments coming so new folks can continue to discover the program. And, of course, keep those questions coming. We do love to hear from you guys. Speaking of hearing from people, we're mixing up a little bit out here throughout the old Volatility Views bat signal today to kind of mix up the hot seats a little bit. We got a fun one today. First off, joining us, he's one half of the dynamic duo that is the Thompson Twins. He is Mr. Matt Thompson, the managing partner over there at Thompson Capital. Matt, welcome back to Volatility Views, sir.
Hey, Mark. Thanks for having me.
And if you got one half, it wouldn't be complete without the other half. So also joining us, squeezing into the other half of that seat, is his brother and life partner, Mr. Mike Thompson, the other managing partner over there at the appropriately named Thompson Capital. Mike, welcome back to the program to you as well.
Yeah, thanks, Mark. Thanks for having us on.
Hope you guys can both squeeze into that seat. I know it's a little tough, a little dicey, but we'll see what we can do. And then also joining us, is that not enough, listeners? Holding down the MIAX hot seat this week, we got a returning offender here on the program, Mr. Jim Carroll, the Senior Vice President and Portfolio Manager over there at TOROSO Advisors. Jim, welcome back to the program to you as well.
Thank you, Mark. Happy to be in the hot seat again.
All right. It should be a good one, listeners. Let's get right into it. A little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Vol Review, the portion of the show where we break down the week that was and indeed still is from all sorts of perspectives. I've said it many times. I feel like I could just cut it and print it and play it at the beginning of this segment every week because it's yet another weird end to yet another weird week out there. Coming into the show here, we saw the markets were earlier in the session leaning into the red. It seems like a lot of this, just preponderance of bad news that's hitting the market towards the end of the week was weighing on the markets. Of course, Congress still deadlocked on the stimulus. They can't get that done, so that's been weighing on the market for some time, continues to right now. Of course, you had some retail sales numbers coming into the market this morning as well. They were good in and of themselves, apropos of nothing else. They were 1.2%. They grew, so that's good. Growing retail sales usually is a good thing, but that's, of course, below the expectations. So that, of course, weighing on the market as well. And then we got some kind of dire news out there. We got the head of the CDC coming in and saying that America should brace for, quote-unquote, the worst fall we've ever had, at least from a public health perspective. I think you'd probably argue that maybe some falls during, the Civil War probably were worse. World War II probably worse as well. But from a public health perspective, the worst we ever have. That means that's going back to, Spanish flu was pretty bad, and yet he's saying it might be worse. So in a normal trading year, that would have sent the markets into a tailspin. CDC coming out saying something like that would have been just terrifying. And yet, most of the major indices were selling off a little bit. Now we're actually seeing them start to buck that trend. Actually, S&P up ever so slightly, about 0.05%. The Dow up pretty firmly, up about 0.25%. And the Nasdaq still to the dark side, off about 0.25%. So that's just 2020, listeners. The CDC can warn of the most dire fall we've ever had, and the market still wants to rally. Coming into the start of the show here, we saw VIX and spikes. VIX was about at near 22, which puts it down about, almost half a handle. It's a little bit shy of that now, about 21 3/4. So puts it down about 2/3 of a point or so. And spikes was at about a 23. Now it's at about a 22 3/4. That puts it down about half a point. Both of them kind of within spitting distance of where we were this time last week. And we got our old friend VVIX moving a bit because vol has been moving. It's up about little over 8 handles to about 114 and change out there. So a lot to parse, a lot to analyze. Let's go in order of the way we came. Let's start with the Thompson Twins. I'll let either one of you dive in, but there's a lot to unpack. A lot has been happening since the last time you guys were on the show, and of course, even this week. So what has been lighting up your collective volatility tapes this week, gentlemen?
Yeah, I'll take that. That's Matt. This is Matt. So, we've just been watching the super steep VIX curve. That's, really our main signaling process is watching that curve. And it's been massive contango now, is basically as steep as we've seen this year. So it's like as if COVID never happened. And then, obviously into those election months, the vol's way higher out there. So it's just watching the market price in that election volatility already. And so we'll see what happens when we round the corner here after Labor Day. Yeah,
it's been a fascinating development. We talked about it many times. The market is just whistling past this whole COVID thing. You look at the VIX futures term structure, the only thing they seem to be pricing in is that election. Of course, they're pricing in a hefty amount of it. We'll get to that in a little bit when we start diving specifically into all things VIX futures in a little bit. Jim, same question for you. Obviously, a lot has been popping off on the volatility space since the last time we chatted. So what's been lighting up your tape since then? And then more importantly, what's been on your radar this week, sir?
So the thing that's lighting up my radar, in addition to the shape of the curve that Matt talked about, we're seeing the VIX trading in an ever narrowing range, what I like to refer to as the squeeze. The Bollinger Bands are tightening up. It's quieted down. It looks like today we might even close below 22 for the first time since February. We'll probably shake that up before the end of the day just to break the streak, keep the streak alive, I should say. But it's the range is narrowing, and historically that means that the quiet is on countdown. So we'll see.
The quiet is on countdown. Indeed. Well, since everyone's interested in all things futures, let's just dive right into that because there's been a lot popping off on that front this past week. Coming into showtime, we saw like the Thompson Twins said there, an interesting contango out there. Coming in, we saw the AUG future a little bit north of a point to the cash. That actually makes it a little bit tighter than last week because it was about 2 points, 2.25 or so points above the cash. This week it's down a little bit. It's about 1.25 points. The SEP future about a 5-point premium to cash. You can see how that premium, that election premium, really starts to kick in pretty early there. That's about a 0.5 point lower than last week, but still obviously pretty rich. Then we get out to October. That's where the juice really kicks in. That's at an 8-point premium. That's pretty much exactly what it was last week. That premium hasn't changed. Nove still pricing in some juice there as well. Not quite 7 handles, about 6.8 or so points. That's actually a little bit higher than it was this time last week as well. And then go out to Jan, because we've seen some interesting discussions about vol turbulence rolling through to Jan. That's still at about a 6.5 point premium. That's actually a little bit higher than it was last week. Last week it was pricing in 6 points. This week, 6.5 points. So if anything, that crazy back end of the curve getting a little bit crazier out there. Thompson Twins, you guys live and breathe for this kind of stuff. It is literally the reason you exist for this VIX futures curve here. But I'm curious, this is obviously extreme volatility. We talked on the show recently as well. Maybe if you believe what some of these prognosticators are saying out there, we talked about some war games they had in the political spectrum lately, where they're wargaming scenarios like we may not know who the heck the president is all the way through to inauguration day. And it seems like the VIX futures are kind of pricing that in. Maybe if you believe some of those scenarios, maybe this is underpriced, but still a lot of craziness afoot. What are your thoughts on this, just to undersell it? Interesting term structure we're seeing out there in VIX futures right now, gentlemen.
Yeah, so I mean, I think you hit on probably the majority of the pertinent issues of why the back end of the curve is bid. There's a whole collection of sort of known unknowns. I think you mentioned sort of the game plan. I think the RNC, there's a story around the RNC developing a plan to, have a legal battle. So the odds of a contested election, or at least kind of a drawn out, Gore-Bush type of thing, are high enough to where that back end of the curve is bid. There's some natural, buyers of protection out there. And there's also the side bid of, we don't know if there's going to be a second wave, come back in the flu season. Comments like you mentioned at the top of the show, the CDC sort of warning everyone to prepare for a tough fall. So there's a plethora of stuff to worry about. And I think investors still have kind of the investing equivalent of PTSD from the March volatility episode. And all that leads to, pretty substantial bid in the back end of the curve.
And you're right. I was joking about all of this is election driven, but obviously those CDC comments are certainly playing into some of that back end premium we're seeing out there in the VIX futures as well. I'm curious, you guys like to hang your hats in the mullets and the Tulums. What's the setup going on right now over there in Thompson Capital?
So lately, we've seen, August goes off the board next week. We've seen just a stubborn bid in the whole vol complex until much closer to expiration. So that's been kind of the trade that's worked a little bit, is you're short some front volatility much closer to expiration and long deferred months, because those don't seem to decay away, even on equity rally days. So we've seen the decay happen, but in a much more confined time frame, where an instrument like VXX or UVXY doesn't necessarily pick up that real close decay, because it's moving out, to the second month on a consistent basis, on a daily basis. So that's what we've been doing and seeing lately.
Yeah, much like Mike's coronavirus haircut, it's starting to be a mullet situation out there.
Well, there's a reason this is not a video show, and that's one of the reasons. I got a nice Corona quarantine beard going, which is not suitable for video consumption at all. So we saved the listeners that pain. Everyone's always asking, do video. This season, you don't want video, listeners. Trust me. But Jim, I know you hang your hat out there on the VIX futures curve as well. You're always tweeting about it over there at VIXologist. This is one of the stranger VIX curves we've seen since we've been doing this show. It's pricing in a lot of interesting known and indeed unknown unknowns towards the end of the year and the beginning of next year. What are your thoughts on this just extreme chasm that is being priced into the latter portion of the VIX curve, sir?
Well, so I've been looking at a couple of things just to try to put it in historical perspective. And, you look at second month futures and sitting at, call it 27, and that's the 85th percentile historically. So even though we've got the steep contango, the absolute level of the futures is still quite high. The other thing that I keep an eye on, and we're breaking some records, is using the SIBO term structure, right? 9 days, VIX, 3 months, 6 months, a year. The spread of 3 months and 6 months over the spot is about as wide as it's ever gotten. So the election, the COVID, pick your mail-in ballots. The bottom line is that the term structure and the forward concern about potential volatility is creating spreads that are as wide as they get.
Since we're hitting on the VIX futures right now, I'm going to cheat and bump up a listener question from our Vol voicemail segment. This comes from the creatively named 99YT. He or she wants to know, well, hello, Vol Squad. Well, hello, 99YT. They want to know, what are your thoughts on this potential new addition to the volatility market and this weird team-up of CME and Nasdaq? And he's, of course, referring to the news that came out earlier this week. If you want to deep dive into this, listeners, we'll have the CME, and I do believe maybe some reps from Nasdaq or perhaps Scott Nations, who created this, on our TWIFO program coming up in the next couple of weeks. So stay tuned for that. But of course, he's referring to this new joint venture for a new volatility future from CME and Nasdaq. It's going to be listed on this newly named, I guess it's been called this about a year or so, but this Nasdaq 100 Volatility Index, VolQ, which is, of course, the former Valdex and SKUDEX, which Scott Nations has talked about on this network, many years ago. This is a product that has seen multiple iterations over time. This is the first I heard of it was probably, I'd say, at least 5 years ago or so, back when it was still an ISE, still existed as a separate entity, and he was going to list this as Valdex and SKUDEX with ISE. Of course, ISE ended up getting acquired by Nasdaq, and we've gone through all the rigmarole, the lawsuits about VIX. Remember, all those lawsuits around VIX, a lot of them stemmed around the SKU portion, that was where the issue, the carpet bombing with the puts. The thing about this SKUDEX and Valdex, now, VolQ, is that it doesn't do that. It's kind of like old school VIX in that scenario. It's effectively taking at the money vol and stripping out all the other quote unquote, what did someone call it on our network recently? Kurtosis nonsense and SKU nonsense. They didn't want any of that. I think that was the director of risk over there on our advisor's option program. So there certainly is a contingent that doesn't want that stuff mixed into their VIX. And so I guess for them, that might be interesting. This product is set to launch, of course, pending approval by the regulators on October 5th. So that makes it interesting, gentlemen. We'll have potentially a new contender here on the volatility futures front in maybe a couple of months. Let's start with the Thompson Twins, because you guys spend your days, like I say, hanging out in that VIX futures term structure. Does the prospect of a new player in the volatility futures intrigue you? And or are you interested in this effectively old school VIX methodology making a comeback? Or do you like the kind of newer flavor with the SKU added in there?
Yeah, I welcome, all new products. This one's definitely interesting for the exact reason that you said it. It is more old school at the money vol. So there's ways to look at it, against VIX and that kind of thing. And the Nasdaq is a much more concentrated index, cap weighted than the S&P. So I think it'd be interesting to, I would say watch it trade, but strategies that play it off against traditional VIX could be interesting for sure. So we'll see how it goes.
Yeah, and we've recently launched a risk managed version of the Nasdaq, so we're excited to have potentially a direct, way to manage that risk. Right now, we're hedging it with VIX, so it'd be nice to kind of cross over and hedge it with the new VolQ futures if they are liquid enough.
Hedge it with the actual thing you're trading. Go figure. That might be kind of nice, huh?
What a concept.
What a crazy world we live in. Jim, same question for you. Does this intrigue you, this notion of a bit of obviously it's on a different index, it's on NASDAQ, but does this notion of maybe a return of this old school methodology, does that get you excited?
I think there is some value in the methodology itself. And as you know, Scott applies it not only to the NAS 100, but, to the SPY. And I watch it as an alternative to VIX, because sometimes the behavior or misbehavior of one versus the other can tell you something. I think that bringing the world of volatility to the NAS 100 is a great thing because it is a different index and it does behave differently. So it would create some new possibilities for those of us who like to tinker around with this stuff.
Yeah, it's hard to argue that Nasdaq doesn't merit a volatility product on it. It certainly has been one of the more volatile indices out there of late. So from that perspective alone, something that directly targets, obviously we have the abstract SIBO VIX of Nasdaq, but you can't trade it. So this is one that would be nice because you can actually sink your teeth into it. And hey, the Thompson Twins can have something they could actually directly hedge with for a change. How nice would that be? So I look forward to talking with those folks, CME, maybe Nasdaq, maybe Scott Nations, on a future episode on this network here so we can get a little bit more detail. I know Scott's been working diligently behind the scenes for a long time, and this just kind of goes to show you. We have the real Vol guys on before, formerly of Volex. Scott, it just shows you the runway it takes, the lead time, the amount of effort it takes to bring a new product to market in the volatility space. This is no mean feat, listeners. The fact that the MIAX folks got anything listed at all, let alone leading into and coming out of a pandemic and everything else, is pretty amazing. Hopefully they'll get those futures listed back over there as well, so we'll have more products to sink our teeth into over there. But still, it is a challenging beast to bring a volatility product to the market, particularly in the wake of the February 2018 VIX Apocalypse, which made the regulators really take a second look at anything volatility related these days. Speaking of volatility related, let's go on out to the options, see what's been lighting it up out here this week. Spikes options, obviously we mentioned it before, still waiting for those Spikes futures to come back on board. Hopefully we'll see a little bit more. We had Shelly on the show last week, give us a little bit of insight there. Hopefully we'll see a little bit more movement on that front in the near future, so you guys can actually, hey, go figure, hedge your options with the futures again. That would be nice. Let's go on out to VIX options. It was a kind of a light day today, but decent, I guess, compared to the seasonally light ADV. It actually wasn't too bad. Let's see if those numbers have jumped up a little bit, because coming into showtime, we saw about 206,000 contracts on the tape in VIX options land. That has jumped up a little bit right now to about 216, but still not a ton. The ADV out there right now is 319. Is actually up ever so slightly from this time last week, up about 4,000 contracts. So not a huge jump, but at least it's not threatening 300K to the downside anymore. Obviously, this is usually the seasonally quiet period for all things VIX. So in a normal year, a non-pandemic, non-election, non-insane year, we'd expect VIX volume to be pretty much anemic. This is obviously anything but this year. So this could jump off the roof as we see another crazy bunch of trading out here. Right now, it's still kind of drifting in the low 300Ks. Let's go on out to the top hot positions out here, the top 10 VIX sizable positions. I put sizable in air quotes because they're not that big these days. It only cost you $83,000 to break into the top 10 these days in VIX land, listeners. That gets you all the way out to the AUG 24 puts. It's like it's all AUG except for two on our top 10 here this week. Number 9, 86,000 of the AUG 25 puts. Number 8, 88,000 of the AUG 50s. AUG 50 calls. Interesting. Number 7, 90K of the AUG 21 puts. Number 6, 94,000 of our first and only October on the list, the October 25 puts. 25 strike, obviously resonating with folks out there these days. Number 5, 95K of the September, the first and only September on our list, September 20 puts. And then number 4, all the way back to August for the rest of them here, 100, all the way up to number 4 before we break 100K. That shows you how light things are out there right now, listeners. 102,000 of the August 60 calls. Number 3, $1.08 of the August 40 calls. Number 2, 128,000 of the August 23 puts. And number 1 with a bullet, 134,000 of the August 20 puts. Just to show how light that is, 134,000 is usually probably about enough to make it into the bottom of the top 10, number 10. So that's enough for number 1 out there right now. 5.85 or so million open out there. Looks like about 2.5 million or close to it on the puts, and close to 3.25 million on the calls out there. I can mention the decent paper today, about 216,000. Of note, though, the Greasy Meatball couldn't be with us today, but he did chime in on the one print that caught his eye this week. Happened to go up today. It's pretty much the only thing going up for size out there in VIX options today. It's an interesting one as well. It was the Jan 75 150. Yes, I said that right, listeners. The Jan 75 150 call spread. Paper bought that thing 25,000 times for 76 cents. So of the 216,000 contracts we saw today, 50K of it coming in this, I think, to put it euphemistically, interesting vertical out here. We've been talking for a while. People have some interest in these upside strikes. Usually it's 60, maybe 70, maybe 80 up to 100. We haven't seen anyone go well north of 100, let alone up to 150. So a lot to unpack. Before I get to the rest of the week and what caught our eye, let's go around the horn really quickly. Let's start again with the Thompson Twins. A, did you notice this vertical? B, if you did, or even if you didn't, what are your thoughts on this 75 150? Obviously, it's probably a hedge against something else, but still interesting strike selection. And then C, outside of that, any other VIX options trades catching your eye this week, gentlemen?
No, I think that one was the standout, just given the gaudy looking strikes used. But yeah, that, Sebastian and I talked about that earlier. It's definitely a disaster type of hedge out there. But like you've been saying, the volume's been slow. I think there's some volatility fatigue out there, perhaps.
Jim, same question for you. A, what are your thoughts on this interesting strike selection for this vertical? I'll have to go look and see what he got for those 150s in Jan. What are those bad boys trading for right now? And then B, any other trades outside of this one in VIX options land catching your eye this week, Jim?
Well, yeah, that one's look. I can't name any names, but I know at least one person who is trying to figure out how to play the apocalypse, and maybe he started. But it's not the only trade out at those kinds of strikes. Although, yeah, there were some December 150s traded this week, not that size, and some November 110s. So that there's some people out there now. Maybe they're selling premium, right? Because hey, how could it possibly get to 100 by November? It's never been to 100 before ever. So there have to be some people who are selling premium out there, but as I said, I know at least one person who thinks before this is over, we're going to set another new record.
I like that. The notion that crazy VIX upside could be the catalyst that starts the apocalypse, Jim. They'll look back many years from now and say, where did that zombie apocalypse go? Oh, yeah, that guy who did the crazy 75 150 in VIX. By the way, I pulled up this spread. He got 20 cents for those 150. So I was kind of dismissive of those, but that's actually not bad. Perhaps another indication of where we find ourselves out there right now, that the Jan 150s are trading for 20 cents. Listeners, so that actually was a material addition to that spread. Well, I thought he got a few cents for it, and it was kind of a de minimis thing. Why bother selling it at that point? But it actually took him down from nearly $1 to 76 cents. So interesting how I think if you're going to get your catastrophe hedge on, why not sell the 150s? That's where we are today, listeners. 150 calls in Jan and VIX, trading for 20 cents. Give us your thoughts on that. I know you guys are not shy of sharing your thoughts on those kind of things. The rest of the week, I won't say similar paper because that was kind of one of the more outlandish trades, but similar size paper out there. Thursday was 275,000, so another pretty light day. The big prints out there, 25K of the August 21 puts and about 11,000 of the SEP 75 calls, so another interesting strike out there, and 11,000 as well of the August 20 puts. Wednesday, 317,000, so a little bit more on the volume side, pretty much exactly in line with the ADV. Almost 50K of the SEP 21 puts went up that day. So some put action in SEP leading the dance, followed by about 23,000 of the August 20 puts and 20K of the SEP 24 puts. Going out to Tuesday. Tuesday was the big day of the week, and I put big in quotes because it wasn't that big, listeners. 363,000 contracts, the big print, 41,000 of the August 20 puts. I shouldn't say big print. That's misleading. The big, most active contract was 41,000. Not all these went up in one print. 41,000 of the August 20 puts and 23,000 of the August 25 puts out there. And then Monday, bringing up the rear there, 225,000 contracts. The big trade out there was 26,500 the August 20 puts and about 23K of the August 21 puts. Let's move on out to the product. A lot of you like to fade out there. It's been a decent trade so far this week. Perhaps not as aggressive as you might like, but hey, we're not backward out there in VIX futures anymore. So maybe you can get a little bit of good juice for this one. This is VXX coming into showtime. Was that threatening 25.5, puts it down almost 0.75 of a point from this time last week. I know, Jim, you like to watch the universe of VIX ETPs. What are your thoughts on what we've been seeing in VXX of late, and any activity catching your eye out there, sir?
Well, the place to be in ETP land recently has been on the short side. VXX has been decaying like crazy. UVXY has been decaying like crazy. SVIXY, continues to limp along because it's only a 1/2 inverse, so it doesn't give you the juice that it used to. With the curve as steep contango at the front end as it has been, the sort of standard short the front end, buy SVIXY or short VXX has been the place to be lately.
Certainly has. We'll have to go out and see if our friend, he's still open. Our friend out there on that AUG 3022 put spread, he's trying to get as much juice as he can for that bad boy. Let's see. VXX had about 106,000 contracts on the tape today. So not bad paper, right around half of its ADV, which is a little bit north of 200,000 right now. The ADV is literally unched from last week, so that's interesting in and of itself. The big prints, or the big most active contracts today, are the AUG 26 calls, about 8,600 of those, so 8,800 actually, so interesting. Calls leading the dance today. And 5,800 of the AUG 25 puts and about 5,500 of the AUG. Actually, a couple big prints out here. These are the weeklies. The August expiring on the 14th. Also 25 strike puts. So some repositioning there on the 25 strike. Not surprising. We're hovering right at that strike right now. Let's break down some of the top positions out here in VXX right now. Number 10, 20K of the September 28 puts. Number 9, 21,000 of the, August 25 puts. Number 8, 23,000 of the August 23 puts. Number 7, 24K of the SEP 22 puts, our first SEP on the list. Number 6, 25K of the SEP 30 calls. If the meatball was here, if we were playing our Where's Caldo game, then it would have been number 6 for the SEP 30 calls. Would have been the winner out there. Number 5, 28,000 of the August 35 calls. Some more calls on the list here. Number 4, 39K, almost 40K of the SEP 23 puts. Number 3, we get up to 50K now of the August 30 calls. And then number 2, number 1, you know they are, listeners. The AUG 30 puts, 90K, and the AUG 22 puts, 92K. Obviously, our friend there waiting to squeeze a little bit more juice out of this bad boy before he rolls. He usually rolls fairly early, but obviously he's not getting enough juice yet. He wants a little bit more before he rolls this bad boy. All right, since we're talking all things on the volatility front, it is that season, it is that time of year, listeners. Let's head on out to all things single name, in particular earnings season. We talk earnings vol a lot. Also, some other things have been driving vol of late in the name I know a lot of you like to trade out there. That's, of course, Apple. Our producer's been keeping an eye on this all day. A lot of big movements out there in Apple right now. Apple's actually off 2.25 right now, so feeling a little bit of that Nasdaq dark side. But they've been making a lot of moves of late. First off, kicking Fortnite out of the App Store. So anyone out there who has a 10 to 12-year-old out there, I've certainly been hearing about it at home. It has been an interesting issue learning about the App Store monopolies out there for the younger set out there. But they kicked it off. That's been quite the brouhaha on Twitter of late. Also, maybe announcing they're going to maybe elbow aside Peloton a little bit, at least on the software side. They're planning a new exercise video subscription service. And so that, of course, took a lot of the wind out of the Peloton sales. Peloton, of course, has been transformed from a expensive, maybe kind of absurd luxury to now literally the only gym in the country that you can really use anymore. So that has sent that stock spiraling. Maybe Apple elbowing into their space, that could maybe get into it. Of course, it looks like it's only software for now. If they come out with the Apple bike, well, then all bets are off. Speaking of other names driving some vol out here, of course, you guys can find these earnings move earnings move results reports for yourselves, you know where to go, theoptionsinsider.com. Let's kick it off. Some hot off the presses earnings results reports for you guys. Cisco was on the 12th here. They went into their announcement 48.10. They were pricing in 5.2%. They delivered about 12%. So a big move out there. One of the few names to actually buck the trend of underperforming from a vol perspective right now. And coming into, they're still about that level, right around 42.5. So they're pretty much still off about almost 12% from where they were going into their earnings. So a little bit of juice out there in Cisco land. Lyft, let's see what the story was on Lyft. Lyft, 30.5 going into their announcement. They were pricing in 10.1%. Looks like pretty much exactly the opposite story. They moved 5%. So pretty much half of what they were pricing in. And let's see, and they're still around that level, about half a buck away. So they're probably close to 6%, but still dramatically underperforming their earnings vol here. They're at about a 28.5 or so right now. A few other names here we had pricing in. I don't think we have the move results reports for these yet. So check the website later today, listeners. You should hopefully have those. DraftKings, they were popping off before the bell today. This was an interesting one. This is their first kind of big announcement we can really parse and analyze. We have no past earnings move data for them. Obviously, they were at 33 3/4 going into their report here. They were pricing in $3.34. Let's just see how that bad boy turned out, listeners. DraftKings, of course, ticker symbol DKNG. They're at 33.61. So there you go. They really have not moved at all since this report, so that would pretty much be a big goose egg for a lot of the premium buyers out there. Walmart, they're next week, 131.89. The time of this report, they were pricing in $5.32. In the past, they moved $5.44, so not really pricing in a heck of a lot of difference either way there. In Walmart, AMAT is a name that's been pretty active. It's usually in our top 10 just about every time we do it on the option block there. They were at 66.5 even coming into this report. They were pricing in, $3.22. In the past, they moved $2.78. They were yesterday after the bell, and they're at 67.5 right now, 67.30. So they moved 80 cents. So another one, maybe not exactly blowing the doors off from an earnings vol perspective. Nvidia, Nvidia is always a good one, so we'll keep an eye on this one next week. They're at 457.61 as of this report. They were pricing in 28.87. In the past, they've moved about $26, 25.89. So a little bit extra juice out there. I encourage you to check out those tickers and a whole bunch more, listeners, because we got a lot of them, including the move results, and the season report. The season report starting to shape out here for this cycle. And once again, playing like the premium sellers are winning the dance out here. I'm curious. Either the Thompson Twins or Jim, feel free to chime in on this one if you wish, but it's been endlessly surprising to me that we have these large names effectively reporting little to no guidance, and yet they're dramatically underperforming from an overall earnings volatility. Last season, we saw dramatic underperformance, and so far this season, something similar. Is this as surprising to you guys as it has been to me, or maybe is this what you guys expected? Maybe Jim, we'll start with you, sir, just to throw the onus on you.
Well, I don't spend an enormous amount of time looking at single names, so I've been expecting that there won't be too much guidance in this current world, and I don't know. I think that's kind of lowered everybody's expectations, or I should say, people are expecting some volatility because nobody knows what's going on.
Same question for you, Thompson Twins. Has this been somewhat surprising to you, the relative dearth of post-earnings vol that we're seeing out there at post-earnings movement as a result of, otherwise what would normally be unprecedented type announcements, gentlemen?
It's, earnings and fundamentals, that's for boomers, that's for old people. These days, all that matters is what's the Fed doing and stay at the macro level. And it seems to be, that makes its way into these earnings reports. It's like, whatever. Is the Fed balance sheet going up? Great.
Kind of hard to argue with that logic, given everything we've seen out there. We'll keep parsing and analyzing these numbers. You guys can kick the tires and light the fires for yourselves completely for free. TheOptionsInsider.com. Now it's time, speaking of you guys, time to get you guys on the show, a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail portion of the show where you guys take the reins, your questions, your comments. We're kicking it off this week. It's been a little while since we've checked in with you guys on your end of the year volatility prognostications. You guys have been somewhat scarily precise the last few years. Obviously, a lot has happened in the last few months or so since the last time we asked you this. So we thought we'd get a little bit of an update on what you guys are feeling for end of the year volatility. Pretty simple. We gave you 4 choices. It is a Twitter poll after all, so we're kind of limited. We can't give you the full spectrum of fractional and decimal points to choose from. We gave you ranges. So we said, where do you think VIX and spikes will close at the end of 2020? We gave you, again, 4 choices. It'll be a nice around here range of somewhere in the 18 to 25 range, so high teens, low 20s, a little bit higher, so let's say 25 to 35, a little bit lower, so pretty much shy of 18 in this scenario, or you're going to go much higher, aka north of 35. I'm looking at the numbers right now, so I cannot vote. Plus, I don't like to do it this early anyway. I don't like to sway the early voting here, but I want our panelists to weigh in because that's kind of fun. Make them squirm a little bit. It is the hot seat, after all. Let's go back. Let's start with the Thompson Twins because they dodged the last one on me. But let's start there. First off, if you guys have a vote on this, feel free. Where do you think we'll be landing at the end of the year? And then B, perhaps more importantly, where do you think our audience is lining up on this one? Let's start with Matt.
I'm thinking the audience probably lined up in the around here category. Would be my guess, 1825. And I think end of the year, probably a bit higher than here. So I'm saying somewhere like around 30-ish. I could see that with some election issues that are lingering. So I'll be in the higher 25 to 35 category.
Higher category. All right, Mike, same question for you, sir. What are you feeling, and what do you think our audience is feeling, sir?
Yeah, I think there's probably some recency bias with the audience opinion on it, so they're probably saying higher than here. The cone of uncertainty is pretty high, but I'm going to go on the optimistic side and say we're going to be under 15 by the end of the year. You need a bunch of things to come together. A clear election winner, a non-Russian vaccine that works, that's demonstrated to work. But I'm taking the optimistic side.
Wow, under 15. That you're right. You do need a lot of pieces to fall into place to make that one come to pass, especially given all the juice they're pricing in towards the end of the year in VIX land. But hey, maybe the world will be a much better place if that were to come to pass. I've said it before on this network back in post 2018, early 2019. Everyone kept saying, "What can we do as an industry to match the epic volume of 2018?" And I said, careful what you wish for, because maybe the world doesn't want what it would take to beat that volume. And sure enough, we're blowing the doors off 2018 right now, and I don't think the world wants any of what it's getting right now. Jim, same question for you, sir. Where are you falling on this poll? And more importantly, where do you think our audience is falling?
I think the audience is in the market right now. So I think the audience is a little higher than where we are today in the 25-35 zone. And I since Mike decided to take the under, I got to take the over, and say that this is north of 35 at the end of the year.
All right, so we got quite the strangle going on here for just amongst our show co-hosts. That's kind of fun. Again, this just went live before the show, so it's an early blush. You got a little bit more time, listeners, to get in there and get your votes in at options over there on the old Twitters to make your voices heard. So far in the early blush of voting here, it's higher. 25 to 35 is leading the dance with a little bit over 36, about 36 and a half. Then we've got number 2 lower. So feeling well, one half of the Thompson squad is putting down lower, below 18, 27.3%. That's much higher than I expected. Our audience is usually a bit of a cynical lot, and they're probably going to fade vol to the upside, and yet not so much, at least in the early voting. And then we have an exact tie for the other end of the strangle with, actually, I should say, around here, 17.4%, and then the far end of the strangle, also much higher, over 35 at 17.4%. Again, that just went live, so listeners, get over there, add options, make your voices heard. If you want to make your voices heard after you're listening to the shows, other ways you can do it, just like our listener here, Jason Francolini. I love the so many Italians lurking in our audience. He gave us a 5-star review over there on Google. It's like he was actually reviewing the app and also the show. He said, awesome app, great shows. So that's a reminder, listeners, you're not just limited to giving us reviews in the podcast stores. We like those, of course, but also the App Store could work as well if you're liking what you get in there. A lot of you have gone that route. So if you want to be like Jason, head on over to your platform of choice, wherever you get the show. Leave those reviews so other folks can continue to discover this program. It's more important these days than ever. Let's see, we already answered this one from 99T about YT about the Nasdaq vol futures. Let's see, next up, Concerned Citizen. Apparently, he has some issues with my usual cohort here on the show, the Rock Lobster. Andrew was chiming on the show a couple of episodes ago. He said there's almost too much crazy for volatility traders to accurately price this market right now. And a Concerned Citizen, I guess, didn't like that. He chimed in and said, like the head of the SIBO once told me, when the data feed to the exchange was delayed, shut the blank up and trade. So apparently he had no patience for the Rock Lobsters. I have a hard time picking or seeing either Bill Brodsky. Bill Brodsky, definitely, I don't picture saying that. Tilly, maybe. He's a former floor guy, so maybe he could say that. But I have a hard time picturing either of those guys just jumping out and saying that. But I'll have to take Concerned Citizen at his word out here. All right, next up, Rick M. wants to know about the Walgreens Boots Alliance earnings. You want to know if this was the first major Q2 earnings report. Well, no, it wasn't, but it was an early one, certainly very early. I think you can probably, obviously the definition of major is subjective out there. All right, let's jump to this one from Caspian. It's kind of fun here. I like the name, too, Caspian. Sounds like a science, Prince Caspian. Wasn't that a comic strip back in the day? Caspian wants to know, I am fairly new to volatility trading and to this podcast. Well, welcome, Caspian. There's a lot of people in your boat, a lot of new listeners discovering the show these days. I found it very informative. I enjoy your analysis of market volatility, but I'm also interested in the volatility of individual stocks. Is it possible to trade the volatility of the underlying stock using options? Maybe extract the volatility directly from the options themselves? Well, short answer is yes, Caspian. It's just your straight up old school, old-fashioned delta hedge straddle. That's still kind of really the only direct game. Obviously, you can do VIX, but that's getting through the filter, the lens of VIX. If you want to go straight to the horse's mouth, the volatility, you got to buy or sell that straddle. And then, of course, the important component of that is to delta hedge it. You move the directional risk from the equation. You're still going to have your gamma and everything else in there, theta, but as the underlying moves, your delta is going to change, hence the hedging. You have to keep hedging that, but that's going to hedge away the directional component and leave you with a much more pure volatility play. I don't know, Jim or the Thompson Twins, anything you want to add here for Caspian? He wants to know, is it possible? Can he possibly do it? Can he extract that vol directly from the options themselves without having to go and use like a VIX or something?
Yeah, no, I think you nailed it with the old school options combinations, and then, just manage your delta hedging costs. And that's about as pure as you can get on single stock vol. Yeah,
that's pretty much it. It is the old school methodology, is what we used to do all the time on the floor, what people still do. They want their pure vol, quote unquote. A delta hedge straddle is kind of hard to beat out. Then obviously that requires a lot of adjustments all the time. So to get your pure, quote unquote, vol, you got to really be adjusting all the time. That's the downside. That gets expensive. That's laborious. It's time consuming. But if that's what you want, and you don't want to play with one of these other proprietary volatility products, and you want it on single names. I mentioned before, maybe it's been a while since on this show, there are single name VIXs. There's a VIX of Apple, VIX of Google, and a few others. Problem is they're not tradable. So you can, if you want to go the VIX of single names, you can at least look at them, but they're not of much use from an end trading perspective. Speaking of being of use, let's just end on this one. It's kind of a funny question. It comes from Joseph. He wants to know, does anyone have a clue how Yahoo Finance calculates their implied volatility? If I had a nickel for every question we got about how Yahoo Finance does something with options, I'd have quite a few nickels, to say the least. It is very much shall we say, a dubious source of options information. So many people have approached me in the industry and said, hey, we're going to redo what Yahoo options is like and the information they provide. Because it is an easy and obvious landing page for a lot of people who are just kind of diving into the fray, maybe don't know better, maybe don't have a good brokerage platform that could provide them with this information. We flirted with this ourselves years ago in the early days of the options inside. In fact, the Yahoo folks came to us, said, hey, do you want to help us reshape our options? I said, yeah, sure. You guys probably could use it. Your data, and not just your data, but your content, your information was kind of lacking. They didn't really have a good go-to option source. So they said, okay, sure. First, all you got to do is buy I think it was somewhere around $50K a month worth of ads on Yahoo, and then we'll be sure to turn on all your stuff. And I said, what kind of a scam is this? And so I kind of walked away and washed my hands of the Yahoo options side and haven't really looked back. Saved myself quite a bit of money in the hindsight. But yeah, short answer to this is Yahoo Finance probably shouldn't be your first go-to destination. What was this? Joseph, if you have issues with how they calculate anything, they have delayed quotes. Their options chains are often goofy. People hit us up all the time. What's up with this options chain? It's Yahoo. They're pulling their data secondhand. It's an old legacy platform. You're much better off using like a dedicated vendor like a LiveVol or a Trade Alert, or of course going through your broker for free and looking at their chains, because they have a vested interest in keeping those tools up to date, those chains up to date, their volatility calculations up to date, because they want you to trade. If they're giving you bad data, that's pretty bad. So ignore these freely available things on the web and instead go through. If you don't have an account with a broker, just set up a paper trading account. They'll let you look at it, kick all the tires there, and you can still get the data. So yeah, Joseph, I think the short advice for you is to wash your hands of all things Yahoo. As we wash our hands with this segment, it is time to go into the most difficult, the most dangerous. I can see them all. They've been sweating all show long, dreading this moment. It is now time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, we have reached it, the abyss, the point of no return here on the show, the portion of the show where we attempt to divine what those ever capricious volatility gods have in store for us for the coming week. Let's see, to round out the show here, VIX cash still hovering right around a 22, so that's pretty much around unch from where it started, a little bit higher than where it started the show, and spikes is at about a 23 even out there, so not much going on out there throughout the show as well. Let's see. So that puts the meatball was 1.25 away on spikes and 2.25 points away on VIX. I was at a 25 double, so I was 2.5 away on spikes and 3.5 away on VIX. So neither of us win because we're beyond our 1 point allotment, but Mr. Meatball was a point closer. So I'll give him that one out there, even though there are, again, no victors here on this week. So that means we turn our attention to next week, and that means I don't get to go first. So I'm going to flip a coin in my head. I'm going to pick Jim. Jim gets the dubious honor of going first. Jim, where do you feel VIX and or spikes will be at this time next week, sir?
So VIX continues to flirt with 22. It's trying to break below 22, but I don't think it's going to hang there. I think it's going higher, and I say 29.
29 even, I should say. See, say that with some conviction, Jim, like you're really feeling it out there. 29. I'll put an exclamation point. There you go. Jim really felt that one. I like it. 29 even. Okay, so warm turning, and I've been leaning that way for a little while, Jim, and it has not been working out. Maybe the fact that you're doing it this week will be the catalyst, the straw that breaks the camel's back, and we will swing to the upside. Now, out to the land of the mullets and the Tulums. Maybe we'll go with Mike first. What are you feeling for this time next week, sir?
So OPEX next week in VIXpiration, I'm feeling an inch up to 25 and a quarter.
25 and a quarter. Interesting. Close to where I was last week. And of course, as we know, it was no bueno for this week. Mr. Matt, same question for you, sir. What are you feeling this time next week out there in VIX and spikes?
Well, I just bumped into my mouse and it moved the cursor on my VIX chart to 2739. So that's my point.
There we go. That's the kind of deep, detailed analysis folks come to Volatility Views for. So, listeners, I've been feeling a little bit more upside for a while. The market could care less about that for the better part of the last few months. This is probably the longest, most protracted losing streak I've ever had in the history of this show. Probably because I'm playing the Russell Rhodes role right now, which is just buying all the upside on vol, which the market's been happy to sell me every single week. But Jim's feeling a little bit of upside out here this week. In fact, looks like all of you are, which is kind of interesting. It doesn't make me the unicorn, the odd duck, which means I probably should fade this. I should go aggressively lower, but I'm not going to do that because I think we will have a little bit more upside in front of us. I'm liking, let's see, I will be the laggard of the bunch, though. I will be the lowest on the totem pole here. I'm going to say next week, roughly 2 handles north of where we are now, 2 and change. I'm going to say 24.35. So that's our market, listeners. I'm oddly enough, the lowest guy on the totem pole next week at 24.35. Mike's next at 25 and a quarter. Then Matt, 27.39, and Jim taking the lead up to the top there with a very aggressive, very optimistic, at least from a vol perspective, very enthusiastic 29. Unfortunately, that music means we've come to the end of an epic journey through the world of volatility. Oh, what a journey it was. Listeners, we talked new products. We talked all things VIX and spikes and single name, the crazy madness that is the VIX futures term structure, and a whole bunch more. Hope you enjoyed it. If you liked it, make sure you leave those reviews so new folks can continue to join the endless party that is Volatility Views. But before we go, let's go back around the horn. Let's start with you, Jim. If folks are intrigued, maybe they have questions about your 29 pick, maybe they just want to reach out to you for more information about TOROSO, where should they go? What should they do, sir?
The best place to find me is on Twitter at Vixologist. You can follow or hit me in the DMs.
There you go. At Vixologist. I wonder what he talks about there, the handle like at Vixologist. What could he possibly say that would be relevant for an audience like this? Find out. At Vixologist is the place to go to get all of his musings on volatility in between his appearances on Volatility Views. And the Thompson Twins. You guys are active out there with some new products and a whole bunch of Twitter as well. If folks want to reach out maybe for more information about your product or everything else you guys are doing, where should they go? What should they do?
Yeah, we can check out our website, thompsoncm.com, like capital management, thompsoncm.com. You can find information on what we do and the ETF that we sub-advise to, MSVX, and that's out at lhafunds.com.
Check it out, MSVX as well. And they also put out some fun tweets over there at Dynamic Vol. It's a good follow if you're into the all things VIX and you're listening to a show like this, so you probably are. Give the Greasy Meatball and the Rock Lobster some love as well over there at Option Pit is the place to go. And of course, don't forget to check out our friends over there in MIAX, MIAXoptions.com/spikes. That's the place to go for all the data on spikes. A snazzy little video explaining what the heck spikes is in a few minutes or less. Of course, most recent data, press releases, and links to a fun show called Volatility Views. You can't beat that. MIAXoptions.com/spikes is the place to go. And on behalf of our friends over there in MIAX land and the Meatball and the Rock Lobster and the Thompson Twins and Mr. Jim, a.k.a. the Vixologist, and indeed myself. It's a mouthful today. I want to thank all of you out there for downloading, streaming, subscribing, for leaving reviews on your platform of choice, of course, for sending in those questions. Keep them coming. Stay safe out there, and we'll see you back next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.